Okay, I will start the live stream now. Let me see if it's live. All right, we are live. Okay, hi, good evening, everyone. So, how is everyone today? I hope some of you joining from Malaysia. I know it's a popular holiday in Malaysia today. So, I hope you enjoy your holiday today. Okay, so everyone, you can say hi in the chat. Good evening, Elena. So maybe when you are just come to joining, and maybe you can share a bit of your background about yourself. Maybe that what's the course you're studying or what kind of work you're doing now. So this let us know a bit of background of about our audience. All right. See, also, I actually see some familiar names. So good evening, everyone. Okay, I hope you are sitting comfortably today, and we will start it soon. All right. Hi, everyone. I see a lot of hi in the chat. Okay. Hi. All right. So without further ado, I think we should start now because I think we have a lot to talk today. So it's a really privilege to have Kevin with us today. So I believe his wealth of experience will bring a unique perspective of the industry that we are all eager to learn from. So I know you are all here to listen to Kevin's talk, not me, but just before we begin, just let me briefly introduce Kevin to everyone. So Kevin is the managing director at GL Hong Kong. So he's an early adopter and investor of both Bitcoin and related DLT technology since 2016. So he spent an early part of his career in the technology and software development. So he switched to institutional asset management and professional investment position with PIMCO and BNP Paribas in London and Hong Kong. So I believe we will learn a lot from him tonight. So let's give him a round of virtual applause to Kevin, everyone. Okay.
Well, thanks
So
very much.
Kevin, the floor is yours.
Thanks very much. Thank you. And thank you for everyone for joining so late. It's always a pleasure to be able to talk about crypto, blockchain, digital assets going forward and into the future and my own experience of it. So yeah, there's quite a few of you. So I got a presentation very quickly today. I'm not going to bore you. I generally like a lot of interaction. So if you guys have any questions, it's really going to be my pleasure to be able to answer your questions today and about what you're thinking about within the crypto, digital assets, and blockchain industry. So you can see up here, this is me, a couple of years younger. And I've got 20 years of institutional asset management experience. As Peggy mentioned, I'm an early adopter of digital assets. I bought my first Bitcoin in 2016. I think I purchased it around about the sort of 5,000, 3,000 US dollar mark. And I've got 6 years experience, professional experience in the digital asset space, which is quite meaningful, especially because for every 1 year that you work in the digital asset space, it's like 4 years in the traditional markets. But in addition to that, I've worked for some of the biggest companies in fixed income across London and Hong Kong, including Fidelity International, PIMCO. These are the some of the two biggest asset managers, and also BNP Paribas. I've had the fortunate pleasure of traveling around the world, both for personal and pleasure, as well as also on a professional basis. So really what I got involved into crypto was because of my background generally. So when I studied, I studied a dual degree both in information systems and tech. And on the other hand, I did finance as well. So I'm originally from South Africa. So a little bit personal information about me. And when I was in South Africa, I did software development for about 2 to 3 years before I went to the UK, to London, and then moved into the financial industry. And after around about, say, 20 years working within the traditional finance industry, I decided to leave that and return back to my tech roots. And that's when I got involved in Bitcoin and digital assets and the blockchain industry. Also, a little bit about me. I'm a very fond educator. So again, it's my pleasure to be able to speak to you guys today as you're thinking about your careers, as you're thinking about like what industry that you want to be able to go into. As a sign of that as well is that I've been an educator to many of Hong Kong's institutions, including the Hong Kong General Chamber of Commerce. I've spoken at a number of times at a number of universities, including City University, Hong Kong University, Chinese University here in Hong Kong. And also I'm an appointed mentor to the Cyberport Incubator Program, which is a government organization here in Hong Kong to really build and incubate the next level of technology startups for the city. So that's a little bit about myself. And really what I want to do today is talk to you about the digital asset and blockchain industry. So typically when I do a couple of these professional presentations, let's say I go to a bank or I go to an asset manager, and let's not forget, if I rewind probably like 6 years ago, no one knew what digital assets were. No one knew what Bitcoin was. I couldn't get, 2017, 2016, I couldn't get director's insurance. Lawyers didn't want to talk to me. You fast forward now, 6 years later, obviously it's a much deeper, it's a much wider industry compared to when I started. So generally, if I go speak to an established asset manager, an established investor, an established bank, really it attracts a varied audience with varied expertise. So typically from the investment side, portfolio managers, traders, these people certainly want to come because they're interested in the market, how to trade crypto, Bitcoin, digital assets. Equally also, it brings in the technology people, developers, IT support, people with some coding language experience. They're like, oh yeah, this is interesting. I want to know how to do this. And equally also at the bottom there, because blockchain and the digital asset universe is a global industry, this brings in the legal and the compliance people, because whether it's KYC, AML, can you trust, do you know who you're doing business with? This also brings in a lot of people from this side. So that's a lot of the lawyers. So as you can see, digital assets and blockchain touch many different professional areas. So hence why in my daily interactions, I speak to people from various subsets, professional subsets. So a little bit about the typical questions I get when I'm talking to investors. So people want to know about, okay, how much should I actually put into digital assets? So whether they're buying Bitcoin or Ethereum. And on the left-hand side here, this is a KPMG. It's one of the biggest audit companies globally. They did a survey, and many of their clients said, okay, 51% of them said, I'm going to put in around about 1% of my portfolio into digital assets. Then 26% said they'll put between 1 to 5% of their portfolio into digital assets. And at the top there, you can see about 4% said that they're going to put in about 15% of their assets into the virtual asset world. So typically what I say is I'm not here to tell people about what the right number is to put in to digital assets. I typically say to them, I can tell you what the wrong number is. The wrong number is 0, because you need diversification and you do need to be able to have access to future-proof your portfolio for the future. So And on the right side here, typically people ask me the questions of like, oh, when to buy, when to sell, because people kind of just want to get rich quick, and there's no such thing. Or if there is such a thing, you're just very lucky. However, that conversation has, over time, as this industry has become more institutional, bigger and larger organizations like the banks and asset managers start to trade it, they more want to understand digital assets, and they more want to join the right side of the queue there to understand how the blockchain actually works and how it can be better to lower cost and increase efficiency. So where's this market actually come from? So I joined around about the 2017, 2016 period. This industry at the start, when it was just Bitcoin alone, and then Ethereum came along around about the sort of 2015 period. This market was only really worth about 150 billion, which is not great in terms of overall liquid size of the traditional financial capital markets. But as you can see, that over time, it certainly had boom and bust cycles, but the net trend trajectory is actually that this blockchain crypto industry is continuing to grow. Of course, yes, it is very volatile. However, the net trend is continued to be up. So you can see in the 2018, 2017 period, there was the ICO boom. I remember those days very well. Went up, it came down, crashing down. And then you can see 2021, a couple of boom and bust cycles. And then right about sort of 2022, just last year, it was obviously a bit of a tough time because we had scandals such as FTX and Terra Luna. And there's a couple of collapses within the industry, which obviously made it very tough. But I've got no doubt in my mind, given where I started from. Remember, I couldn't get director's insurance. I couldn't get a legal opinion back then. And the market is infinitely wider and infinitely deeper as more companies and people, talented people, enter this industry. So, yeah, why do I say that? Well, like the biggest companies you can see on the right-hand side, your BlackRock CEO, Larry Fink, he was like, Bitcoin is just money laundering. And now what's happened is BlackRock is actually trying to launch an ETF. The banks all hated it. JP Morgan said like, oh, this is a complete fraud. And now JP Morgan is one of the biggest and fastest moving organizations on the banking side to do something with blockchain and crypto. You need to look at guys like Tesla, Elon Musk. He's obviously bought Bitcoin. If you think about guys like PayPal has now enabled stablecoin trading, which is a version of crypto. If you look at Grab in Singapore, they've actually just put out a Web3 wallet. So there's definitely where you see now where the big institutions are actually coming and adopting the blockchain industries. And that's kind of bringing a much more sort of stable pace to the development of this industry as it goes more mainstream. Web3, for those of you that don't know about what Web3 is, I'll explain that to you now. However, what we're seeing now is that a lot of these companies are starting to gravitate and move to what we call Web3. Facebook, Amazon, Netflix, Google, these are all what you call Web2 companies. They're very centralized, single, monolithic corporations that they effectively own all their users' data. The users themselves are actually the product. They are the people that are being advertised to. And the Web3 world is obviously something that these big companies, they recognize that the world is going to Web3, a more digital, distributed, decentralized universe. And they are starting to actively invest into things like metaverse, blockchain gaming, as well as also other Web3 projects. I'll explain a little bit more about that now. Okay, so Web3, as I promised, I'll explain what Web3 is. If we cast our mind back to perhaps maybe giving away my age, the early, let's say 90s, this is when Web 1 on the left-hand side really emerged. What was Web 1? It was, the internet was just born. It was just static info, and this is what we call the ability to read. So let's say someone went traveling, they could write a blog about where they traveled, upload some photos, that's great. And then their friends sitting back at home would be able to read their information. So that was the first iteration of what Web 1 was, just very, very simple websites. So that's like the 1990s, right? Now, then Web 2, this is where we currently are. Or rather, I guess this is where we are now through the likes of Facebook, Instagram, Snap, Line, and so forth. But this is what we call the era of read and write. So not only can I read about your status updates on, let's say, Facebook, but I can also write about my experience and share that. And so this is what becomes the social media platform, the social exchanges amongst users. However, in this instance, Facebook owns all your data, Instagram owns all your data, TikTok owns all your data. So there's all this concern about like what is actually privacy, and also how they're effectively monetizing your data in order to be able to sell back to you or sell back to other companies, right? For advertising and arguably in many cases manipulation. Now, where we are right now is currently in we're slightly in between Web 3 and Web 2. It's kind of Web 2.5, where a lot of these mainstream companies are moving to Web 3. But what is the main philosophical difference about Web 3? It's about the ability to read, write, and own. Because remember, in a Web 2 environment, Facebook owns your data. In a Web 3 environment, this is the next generation, you own your own data. You can decide, listen, I want to be able to monetize myself, my data, whether I go reading about certain content, I look at certain pictures, I watch certain videos. You can decide, okay, I want to actually accept some cookies. I want to be able to have my data passed out, and then but I want to be paid for that information. So if everyone started to act in that kind of way, people could actually monetize themselves and monetize their own data. So this is very much a world aware, decentralized data. And if you had held your own wallet, this is going to be a universe that is pretty much run on the internet on blockchains. So this is kind of important about where we are philosophically headed. Okay, so just a quick thing. A little bit technical, but usually start off with this because it's important for people to understand the difference between a centralized network, a decentralized network, and what decentralized distributed network. In a case of a centralized network, you can see on the left-hand side there, if that central node has to fail, again, there'd be something like if Facebook had to fail, the platform would be offline, right? That single point of failure could be a bank, it could be an asset manager, the whole network would be down. In a kind of decentralized network, in the middle there, if one of the nodes had to fail, it's only that node that's connected to the main chain that would be orphaned or be cut off, and the rest of the network could continue to operate. But if you had to knock off a couple of those nodes, that would also impair the network quite dramatically. But in the case of a distributed network, on the right-hand side, you can see that you can have multiple points of failure through many red X's. However, the network would still continue to run, and because of its decentralized distributed nature, it would be almost uncensorable, right? So this is what is also driving the philosophy around the decentralized digital economy, the Web3 economy of the future, is that it is uncensorable because no one government actually can control the network. It would be like trying to shut down the internet. Very difficult to do, if not borderline impossible. So what really gives like this blockchain and decentralized network its value? Well, like a social media platform, if you only have one user, not very valuable. So that's on the bottom left-hand side. But you can see that the value starts to go up quite dramatically the more users that you add. So if you added 2 users, if you had 20 users, if you had 200 users, if you have 200 million users, and you have 2 billion users, the power of that network becomes very valuable, both in a Web2 context with just one centralized entity, or within a decentralized entity where everyone's kind of working on the same network, interacting with each other on their own sovereign basis, monetizing their own data in isolation. Okay. So in social networks, the more users, the more valuable the network. Goes without saying. Everyone likes to talk to everyone else. Okay. So where are we in all of this? The digital economies, we're kind of in the middle of these waves of adoptions. The reason why I didn't put a straight line up is because there have certainly been some downdrafts as the industry does actually take some step back, rises up again, steps down, and rises again. But I do believe that given the current state of the world, that we'll move towards true decentralization, non-censorship, and really trustless applications for the future. Okay, just a little bit about the industry. Okay, so there's been no doubt that there's been a lot of private and venture capital that has come into the blockchain world. So what I've actually shown here is the tech industry. You can see around about 2021 at the end, just beginning of 2022, we pretty much saw the peak of about 160, 130 deals coming over Q4, Q1 of 21, 22, and a sizable amount of money coming into the about 2 trillion of assets coming in into the digital asset and the tech space. Now, obviously, what's happened more recently is AI has emerged in the last, let's say, year. So blockchain, crypto, very hype industry. Everyone's asking questions about it. AI comes along. That's also an industry I'm very positive on in combination with blockchain. But equally, also AI is something that's also changing the way the various industries actually work, including traditional finance, and also how blockchain should be thinking about going forward. That's going to be some interesting case studies of how to develop further. I'll come to some examples a little later on. Okay, so a little bit about digital assets. It's about $1 trillion industry. At the most recent highs, it was about a $3 trillion industry. But this actually shows typically how has the digital asset industry market value been allocated. In blue, you can see that Bitcoin, BTC, has typically been, especially in the early days on the left-hand side, around about 2014, a majority of the market. There were times in around 2018 and sort of early 2021, Ethereum started to grow. Some of the other, what we call others, there's the altcoins, some of the less known cryptocurrencies started to really boom and grow. But of course, they went bust, some of them. And many of these projects, projects, they fell away. And it really, in this situation we are now, is Bitcoin and Ether are pretty much the king and the queen of the cryptocurrency world. They provide the most liquidity, they provide the most opportunity to trade, and they allow you to kind of get in and out as and when with appropriate levels of ability to hedge yourself as well in the financial market, or in this rather cryptocurrency market. So it's a little bit about breakdown about which are the biggest coins out there. But obviously in the gray area just below, that market does hold some value. There are some good and interesting projects and teams out there. However, I think that these become typically more venture capital, and in the cryptocurrency world, certainly a little bit more risky when compared to the likes of, say, BTC and ETH. Okay, a little bit about this market again is like, okay, who controls a lot of the trading volume? You can see here that Binance in orange, they're one of the biggest cryptocurrency exchanges. You might have heard about them. And on any given month, about just shy of $1 trillion trades through these exchanges. Upbit, OKX, Coinbase, Bybit, these other exchanges, of course, they do meaningful volume, but Binance continues to be one of the major trading venues at this time. Okay. A little bit about the digital asset tech stack. Many of you might be thinking, okay, how do I think about this industry? If I want to get involved, where do I kind of place myself? So if you're trying to understand about this industry, you've got to start from the basics. You firstly have to understand about the bottom layer, number one, blockchain and scaling solutions. These are base layer blockchains. They have typically their own native protocol assets. So as an example, you've got the Bitcoin network, which is global. It's decentralized. No government can control the Bitcoin network. That's the network, but also on top of that network, you've got the Bitcoin tokens, which are effectively transmitted on the Bitcoin network. So this is really what we call layer one. It's blockchain and tokens. Even Ethereum has to have a base layer, and even Ethereum has its own token, which is native to that its own network. So we've seen some of the smartest and brightest people that in the early days started building this infrastructure at the bottom. And some of them failed, but equally also some of them went on to become billion-dollar operations and are still doing very well. Most notable is Ethereum. Now, the reason why I'd like to focus on Ethereum here is because Bitcoin is a speculative asset. You might argue it doesn't hold any fundamental or intrinsic value. So I like to kind of characterize Bitcoin as digital gold, because the value of gold, depending if you're in Malaysia, Hong Kong, the US, Argentina, maybe in Europe, depending on your economic situation, you might view gold as very different. But in the case of Ethereum, Ethereum is what I call digital oil, because with the Ethereum programming protocol, what you can actually do is you can build layer two applications and protocols. These protocols really just sit on the internet. And instead of me having to interact with, let's say, a bank or a corporate or an insurance company or any other mainstream financial TradFi company, instead of that, I can just sit at home and I can connect to the internet and interact with a protocol who's programmed to execute actions on an autonomous basis. So I'll move forward very quickly because these, we have limited time, but really layer one, layer two, these are kind of where the action is within the crypto market. And so if you're looking to get involved, I think that these teams, certainly in the layer two, the projects and teams there, that's a very active place that right now. If you're looking to be involved in the virtual asset world, it can be a very, very lucrative industry. But as I mentioned, it can be filled with booms. It can also be filled with busts. So generally, there can be an unclear global regulatory environment. However, we're seeing that there's more regulations being put into place, which is a good thing because regulations means that this industry is being accepted. There's fragmented market liquidity. However, as bigger institutions start to step in, like some of the banks, they're starting to offer ETFs. We're going to see more liquidity come in to the system. Of course, operational and cybersecurity, we're dealing with tech. There's a lot of hacks. There's a lot of, like, let's say, education around cybersecurity, how to stay safe. This is always going to be a big, big, big area where the job growth is. Because as long as there are threats in the market, the threats will never end. There's always going to have to be a corresponding solution in order to be able to head off and solve for that threat. So for many of you, the cybersecurity is certainly can be an area to look forward in the future. Of course, as I mentioned, volatile market risk, you might be $10 or like 10% up in an hour. You might be 20% down in the next hour. So for traders, this presents a good opportunity because if you like volatile markets, there's always going to be opportunity for you to be able to trade that. And what I mean by asymmetric risk profile, well, that just means that because sometimes you are in smaller markets, some people have information that you don't. And if you have that information, you're definitely at an advantage over your competitors. Now, we can't control the global regulatory environment. However, we can certainly aim to control all the other four factors. And if you can do that, you can have a successful business. Okay, so a little bit more about, okay, you're sounds interesting, Kev. What are the kind of companies that are out there? So these are some of the institutional companies that have entered this space. I'll give you some examples. Okay, so on the payment side, Circle, USDC, Tether, they've effectively created like an $80 billion market where you can peg US dollars to a token or any currency, call it sterling or Japanese yen. And that means that an investor or a user can deposit cash in a bank, and one of these guys will issue effectively a token, which you can then use in the digital Web3 economy. So this has been a pretty interesting area, and I think that will continue to grow. Other things that have really came up are, let's see, infrastructure. Infrastructure, these are companies that are actually like DAML. They're working with the likes of Goldman Sachs, R3 and Corda. At the time, they were working on enterprise technology for big institutions like the banks in order to be able to adopt to their system. You got companies like Coinbase as post-trade clearing and settlement and trading, BitGo, one of the largest custodians, where they would effectively hold and safekeep your crypto. If you were, let's say, I mean, I always believe in self-custody, but if you wanted to give it to an institution to manage and you were a little bit unsure, you could go to BitGo. And some of these exchanges certainly work with custody agents like BitGo as well. Let's see, some other companies here like Securitized. You might have heard about real world assets, RWAs. So how do you take real world assets like equities, like cash? How do you take things like property, like buildings? How do you put them into, securitize them, break them down into tokens, and then distribute them to a number of users and create liquidity around that so people can enter and also exit any liquid investment, such as a building, as an example. Let's see, guys like, let's see, yeah, Fireblocks is another big one. These guys are, let's say, wallet infrastructure providers. Now, you as an individual, very easy for you to open up a retail wallet and for you to go off and interact to the digital asset world. Fireblocks is providing wallet custody services to big, large corporations so that they can access or build businesses around the digital asset space. So these are all examples of big institutional companies that are centrally controlled. And if you're looking for a career to join a company, this is potentially the way to go. Now, on the other side, right, DeFi, decentralized finance, these have no centralized kind of control. Well, they might, but in some cases they might not. So if you're interested in getting involved in technology, learning with Talent Labs on how to be able to develop a protocol, a distributed app built on Ethereum, you could actually do a very similar thing that those centralized entities I showed on the previous slide, and you could do that in a decentralized way. And for instance, DYDX, where's DYDX here? There's somewhere on here. Yeah, this is DYDX, yeah. So what they do is they do derivatives, the derivatives marketplace. And what instead of dealing directly with, let's say, an investment bank to do it, what you're doing is you're actually connecting to a decentralized application that lives on the Ethereum blockchain. And you do all your trading and settlement there. Many of these will also be able to run on decentralized autonomous organizations, so that if you hold a decent amount of tokens, you as a user or a developer or a contributor can actually have more say about how these projects are actually run. So in terms of decentralized finance, anything you do in decentralized world can be done here. Another one also is like MetaMask, which is a wallet service. It's probably one of the most famous ones. You can just connect from your computer, and you can actually connect to many of these services in order to be able to achieve your goal. If you were interested in that, I can tell you something that, you could go work for a centralized finance company, or you could go work for one of these projects, and you might never meet your colleagues and your co-workers. They might just be known as like autonomous names. But the beauty about what I think that the sort of DeFi and decentralized finance DAOs are going to really disrupt the way we work in the future is because it's going to be a new way to mobilize human capital. You, me, and people are generally contributors. We have our own human intellect and capital. It's up to us about how we spend our time, about how we deploy that. Now, some of the times I've seen some of the smartest developers, they don't just work for one centralized company. They work in the DeFi space, and they work on what they're passionate about. They work on things that, maybe they're working on 6 or 7 different projects. And with those 6 or 7 projects, they're going to get tokens. And with, some of them might fail, sure, but maybe they hit 2 that really do well. And that kind of compensates them for spending their time. But at least also what I think about is as human beings, we care about in the future working for things that we're passionate about, as opposed to working just for a centralized company. So this is the benefit of why I think decentralized finance and DeFi and DAOs are going to make a difference in the longer term. There are, of course, inefficiencies within that market, and I'm happy to take questions and to explain a little bit about that as well. Okay. And again, just to reiterate, the reason why decentralized networks work is because DeFi works in the future is because there can be multiple sources of failure, and yet the network and the community can still continue to operate and carry on. Okay. Investors, right? So this industry from the start wasn't supported by any big major institutions. It was really private capital, self-funded, and to be honest, it's been the venture capital kind of community that really started to invest into this industry, started to raise it, and gave a lot of smart people money to build the infrastructure to really bring the crypto and digital asset industry up. However, of course, there are a number of bad actors, but the general ecosystem is you've got traditional VCs like Andreessen Horowitz, Lightspeed Ventures, Sequoia Capital. They've invested heavily into the crypto space. You also have dedicated crypto VCs. Some of the traditional VCs obviously invest in things like Web3 technology, but there have been dedicated crypto venture capital companies as well. And also there's quite a large number of accelerators and incubators. Of course, I represent Cyberport as a mentor as well, contribute to them here in Hong Kong. So yeah, there's definitely also a lot of government support in order to be able to push the Web3 universe forward, especially also here in Hong Kong. So I think there's multiple areas that if you're interested in joining this industry, joining from the investment side, joining from a service provider side, joining from a project side, or joining a centralized company, there's many various things you can do. So I'm going to just stop there for now and actually see if there's any questions. Thank you.
Thank you, Kevin. It's really, for me, it's really eye-opening already. So I believe everyone already have a basic understanding about the industry, and I see that we have quite some question popping up in the chat. So I guess we can start. our Q&A.
Sure.
So we have, let me go back to the first questions. So how to differentiate the real or fake digital asset? Like JPEGs just crashed recently.
Sure. Yeah, good question. Here in Hong Kong, JPEX was a cryptocurrency exchange. Now, to be quite clear, that's a centralized exchange company that decided that they were going to take on people's assets, and then they just decided that they, weren't going to basically pay people back. So it was deceptive, there was fraud, it was criminal, and bad actors like that actually need to be taken out the market, certainly. So I think in this instance, you need to differentiate between the centralized company like JPEX. Were they giving access to people to do things like Ether? Were they giving people access to do things like Bitcoin? Sure. Was there a problem with Bitcoin? Was there a problem with Ethereum? Was there a problem with the underlying assets that they potentially were, allowing their clients to trade? No, there wasn't. The fault came in by JPEG's management from malfeasance, poor governance, and just being an outright scam. So what is actually going to solve that at the moment is regulation. More and more regulation, government rules are being sort of put in place. You've got companies like OSL, Hashkey, Coinbase, Bitstamp in the UK. These are recognized and audited, governed cryptocurrency exchanges. So I think you're going to see more and more of that come through now. So I think that is going to be how you differentiate between the venues that you trade on a centralized basis. On a decentralized basis, I mean, that's a really different story. You kind of have to be involved for a little bit of time and you have to spend a bit more time understanding who are the people that are building those decentralized dApps and protocols. Typically, look, if you look at guys like SushiSwap, you look at sort of Uniswap, if you look at guys like Compound, Aave, they've been around a long time. And if they wanted to be able to pull a scam, okay. But what stops them from being able to pull scams is that all their code has to be published and vetted by the community. But what that means is because it's so transparent, you have to be able to have a specialist knowledge to be able to look at the code and actually go through the audit to understand exactly how it's working and be involved very much in the community as a contributor to know actually what's going on. So there's two ways, right? The control either be your control of investing your time in the DeFi or the government placing control on those centralized exchanges. Thank you for the question.
Okay, thank you, Kevin. And we have another question is, it seems we just need ePay, not much using Bitcoin. Is that correct?
Yeah, sure. It's a good question. I get asked that a lot. Okay, so if you use ePay, it's your choice. It's your choice. But there's 7 billion people on the planet. There's people in Malaysia, there's people in Hong Kong, UK, and there's also a person in Venezuela, right? And let's just say Venezuela, the people have been working all their life, and yet their government is very corrupt. They've had hyperinflation. They've got a very mismanaged economy. You know, the price of bread is here today and it's off the charts tomorrow. Now, do they need an e-peso that's just going to devalue? And like cost of bread today is not the same cost of bread as is going to be tomorrow. And if they wanted to actually purchase into Bitcoin, because Bitcoin actually represented a better way for them to be able to preserve their family wealth, right? Because of a government that they can't control, I would say that, yeah, it relatively speaking, for their situation, that's probably a good option. But now, if you're sitting in a very high income GDP, yeah, arguably rich country like Hong Kong or London, UK or New York, you might not feel the same way. Your government is, you might not be happy with them, but yeah, that's okay. The price of bread today is sort of the same similar price as what I expect it to be tomorrow. You hope they're not going to mismanage their economy. So in that case, you would treat Bitcoin like a asset to trade, like a commodity. you wouldn't view it as a sort of store of value. It wouldn't be an investment. It would be just an item, a commodity to trade. So I think, but the benefit of a global asset, it means different things to different people depending on their relative situation. So if you want to use ePay, by all means, but it just provides people a different option.
Thank you, Kevin. It's very insightful, actually, for me. And okay, our next question is, what's your thought on NFT? I heard it's almost worthless now.
Sure. Okay, so let me go back to sharing my screen again. Okay, it's a very good question. So I was never actually a buyer of NFTs. However, what I will say is that it did do one positive thing. It did a couple of negative things, but it did a couple of positive things. The negative things were it created a lot of hype, it sucked in a lot of people, and there was people are obviously left with a few financial holes. But the one thing it did do, though, it did show and demonstrate that art can be digitally represented. Okay, so first I'm going to just show you something here. This is the topology of how crypto is actually broken down. So first of all, you've got Bitcoin, Litecoin, Ripple, Dogecoin. These are what you call virtual commodities. Then you got smart contract platforms like Ethereum. This means you can actually program the smart contracts to become these autonomous, decentralized dApps. Now, the reason why I really iterate on smart contract platforms is because stable coins are effectively built on these smart contracts. DeFi, decentralized finance, like Uniswap, PancakeSwap, DYDX are built on smart contract platforms. NFTs are built on that too. Metaverse in gaming and STOs, security token offerings. Now, in this instance, NFTs here, yes, they've gone through a boom, they've gone from a bust, and there'll be many more cycles like that, I can guarantee you, within the crypto market. But there is innovation that actually did occur there, right? So if I think about like gaming, if I think about sort of ticketing, and if you think about what is the actual innovation on a non-fungible token, right? A non-fungible token means it's unique. There's only one. What is unique? You are unique. So as this digital world starts to grow, your digital identity is going to be an NFT. So never mind the fact that it was used for art, right? That's only just one use case. But when it comes to securing your passport, when it comes to securing your identity, when it comes to securing your medical records that you don't want other people to have access to, and when it comes to certain financial transactions in the traditional finance world, non-fungible tokens, NFTs, are actually going to be quite important. So I think you should separate like the use case versus the actual technology. But certainly, I think that the past experience of NFTs certainly was a boom and a bust.
Okay, thank you, Kevin. Okay, here we come to the next question is from Jeremy. Jeremy say, I came across DAO recently. Do you mind explaining what is DAO and where DAO can be used and why it exists?
Okay. Right. So DAOs. Okay. I mentioned this earlier where DAOs, decentralized autonomous organizations, this is going to be, I believe, the new way human capital is actually going to grow together and organize itself. So decentralized autonomous organizations are people. Let's say there's 10 people for the sake of simplicity. Whether it's 10 people or 10 million people, the concept is the same. Now, what happens is we all get together. We're going to online on a Reddit, and we say, hey, I know what we're going to do. We're going to come up with a new project. So we get these 10 people together, and we say, hey, okay, these are the things that we need to do. And anyone who achieves these 10 things, like set up the Facebook page, set up the LinkedIn page, set up the TikTok page, and all these sort of tasks, as a user, registered user of this decentralized autonomous organization, if I go do more tasks, I get rewarded in more tokens. So if I have more tokens, that means I'm going to have a bigger say in the governance as we progress. So that's week one, setting up the social media. Next week, it's going to be like, okay, who's going to set up the bank accounts? Who's going to set up the websites? Who's going to handle the search engine optimization? Who's going to do the business development? Who's going to do the strategic marketing? And, you know, who's going to do like the programming? So again, there'll be another set of tasks. And the more people who do those tasks and then knock them off, they're going to get more tokens. But now imagine on the development stream, you're 2 years into the project now, and some of these people have more tokens because they've done more work and contributed more towards the project, and some people have less tokens. So what it means is that because you've invested more time, and that at a particular time, 2 years down the line, you've got to make a choice. It's like, hey, do we use Ethereum or do we use Solana for our next tech stack build, or which price oracle do we use? If you've contributed more, you can actually vote on a proposal and you will have more say in about deciding which way the protocol should actually go, and the decision where that sort of project should actually go. So that is ultimately what a decentralized autonomous organization. It operates very much like a share structure of a company. The more shares you have, the bigger decision you can have on a company's strategy going forward, its direction. But equally, imagine you can have not just, let's say, 10,000 shareholders in a company, which you generally need capital, right? So you have to spend money to buy those shares. But in the DAO, the decentralized autonomous organization, it becomes, we're just going to start a project. There's no money. We're just going to get tokens. And if those tokens become valuable, that's how we're going to build the value. So it's much more about how you kind of create the network, the community, and the how people spend their time and their human capital. And again, DAOs, what they mean also is you can have 20 DAOs, you can have 50 DAOs. You don't have to only just work for one company. You can work for like as many projects as you want, and also focus on the ones that you're passionate about.
Okay, thank you, Kevin, for answering the question. So here we comes to the next question. It's a bit long question. Okay, I have question regarding the foundation of blockchain. Usually in the blockchain system, we tend to rely on the technology to do the work. So I'm wondering, what's the rationality of having a validation system in the consensus of the crypto system? Because usually it's a computer doing the validation work, not human, right?
Yeah. Okay, so Ishradi, hopefully I said that right. Thank you for the question. You're asking about the consensus mechanism of a blockchain. Okay, so it is absolutely true. There's not humans. It's what we call nodes, right, that are effectively doing the work. Now, what happens is, let's put it this way. So you're asking about the consensus technology. So let's imagine we're verifying and confirming a transaction on the Bitcoin network. One person says that the transaction is valid. Another person says the transaction is valid. And there's a third person, myself, who says, no, like this transaction is not valid. Majority rules. If two people say that the transaction is valid, I get overwritten, right? And I effectively get overruled and the transaction's allowed to pass. So what you really want to do is create an environment where the system can't be hacked. You got to create an environment where bad behavior is not rewarded. And so in the instance of like the consensus mechanism, people that, let's say, propose kind of like, let's say, the wrong answer, they are at risk in the, like, for instance, in the Ethereum network, where they can actually get slashed, and their rewards for like mining or producing blocks on the blockchain will actually impair their economic ability to be rewarded. But if you're a good actor, you're a positive actor, and you're acting in the interest of the community, you're not at risk of being slashed, and you are, will reap all the sort of economic benefits. So yes, I mean, I think your sort of question is a little bit cryptic or a little bit broad, but yeah, it's the computer, the nodes that are absolutely doing the work. It's not humans. I think though, what you're perhaps maybe confusing a little is a DAO in how sort of users can actually vote and sort of achieve, let's say, a majority to go a certain strategic direction for a project versus a blockchain, about how that actually achieves consensus. In the blockchain case, that is absolutely automatic. And the nodes and the crypto miners, in the case of Bitcoin, they set up in order to be able to process transactions in an automated basis. A shameless plug, if you do the M0 Talent Labs blockchain course, I go into this in detail. So I would definitely recommend for you to actually sign up for that course to actually learn more about the consensus mechanism and how that's actually achieved. Thank you.
Okay, thank you, Kevin. Okay, let's come to the next question. Okay, Hannah, we will see continued dominance of Bitcoin and Ethereum, or it will be changed in the future?
Good question. Look, the only thing you can be certain of in the future is death and taxes, right? And I can tell you that things change. Things change so quickly. My view, though, is after the 6 years I've been involved in this industry, Bitcoin and Ethereum are the two major assets within this market. Will that persist in the next 5 years? Yeah, I'm going to say yes. I'm going to say yes. But look, AI is actually changing things today. AI is changing how we work. Now, I think the combination of AI and the combination of crypto is actually probably one of the most powerful things. Now, let's just take an example, right? Search engine optimization. What does that mean? It means you put up a website to advertise cookies. You're selling cookies. Yeah. What you do is you want to be on #1 on Google, so you go to search engine optimization. And right now, I speak to someone in the Philippines. I'd get a guy. He's going to say, hey, man, I'll get you onto page 1, page 2, Google search engine. No problem. I know how the algorithm works. Awesome. So in today's case, you hire that guy, you pay him, send him a bank transfer. Great. Yeah, I can probably say in the next 12 to 18 months, what's going to happen is there's going to be an AI agent sitting on the internet, powered by Bard, ChatGPT, powered by Poe, you name it, right? And this agent is not going to be able to open up a bank account, right? It can't KYC, can't present a passport, it can't like go to the bank and can't open up a bank account. But this AI agent is going to be able to do search engine optimization to get you to page 1 on Google, and it's going to be able to do 10,000 web pages at a time versus, let's say, the 10 a week that the guy down in the Philippines will be able to do. But how is that AI agent going to get paid? It's going to get paid in crypto because it can't take dollars, can't take Hong Kong dollars, can't take Japanese yen. So, you're doing 10,000 pages through AI and you just get paid in crypto. So I think we're going to end up in an environment where perhaps maybe it's not Bitcoin, maybe it's not Ethereum, but it will be some version of cryptocurrency out there that these AI agents start to get paid in. And one more thing, it's not hard to believe that driving autonomous cars is just around the corner. We're about to send people to Mars, right, to another planet. And Elon Musk is a crazy genius guy, right? He's not only got one of the biggest electric car companies on the planet, he's also sending people to Mars. And he controls Twitter, X. And he's also putting payments like PayPal. And by the way, he started PayPal, right? And PayPal's just allowed crypto to be enabled on their platform. And now Twitter is going to become a super app like WeChat, like Grab, and it's going to allow Web3 payments on there. So if driverless cars are going to be, maybe here in the next 3 years, who's to say that your car, if it needs its tires changed, drives itself when you're sleeping to go to the garage, get its tires changed by other robots? How is it going to pay? it might very well pay in crypto. Will that be Bitcoin? Will that be Ether? Maybe not, but it'll be some version of crypto.
Okay, thank you, Kevin. Okay, we are on the top hour, but still we have just a couple of questions. So the next question is, what's your thoughts on the whole beyond situation going on right now with the SEC, CFTC lawsuit, the European debanking, and US resignation since Binance is pretty much the biggest.
Well, it certainly seems that like there's a lot of experienced cryptocurrency traders here. So maybe I'm keeping going too simple. So the Binance situation is, I think Binance is going to get slowly strangled. As big as the company is, as well as they've done, the regulators and the sovereign states are going to slowly push them out of business and or force them into compliance with some heavy fines if they exist in 5 to 6 years' time. I believe that the banks, as the cost of doing business and the cost of compliance starts to go up, they're going to start to really muscle in. Right? And it's actually also a little bit of a source of frustration of mine. I come from both sides, but equally, all this innovation, all this great work that we've done in the crypto industry, the banks are like, thanks, crypto guys, but we'll take it from here, right? We know how to do this. We got the cost, we got the compliance. Okay, so I think in 3 to 5 years, I can kind of see the banks getting much more involved in crypto, like whether it's BlackRock launching an ETF, whether it's Fidelity, one of my old employers, getting involved quite actively. So with the SEC, CFTC lawsuits, European debankings, Binance is so Binance is the biggest centralized exchange. What I can tell you though is the biggest risk to the crypto industry right now is certainly the banking rails effectively been shut off. But you got like places like the United Arab Emirates, the UAE, Hong Kong, obviously increasingly it supports Singapore. The US is a very hostile place at the moment, but that's why it's kind of driving a lot more innovation out to Asia. So I work a lot with the Hong Kong government, trying to bring companies back to set up in Hong Kong, and there has been a lot more interest for people to return. In terms of Quadrica, that was a Canadian crypto exchange. The guy went missing. That was in 2019, 2020, I believe. And unfortunately, just bad behavior continues to repeat itself. And hence, that's why the cost of doing business in the crypto world is going up because of regulation.
Hey, thank you, Kevin, for the very insightful answers and your opinions. And we are a bit over the hours, but I think we are doing great on time. And just want to ask if you have any question. If not, I just put the feedback link in the chat. I would love to hear your feedback about the talk and maybe future topic you would like to have. And once again, thank you, Kevin, for sitting with us tonight. And maybe some of you are going to celebrate Mid-Autumn Festival soon for next few days. So have a nice weekend ahead and happy Mid-Autumn Festival. 中秋节快乐. Thank you everyone for your time tonight. Thank you everyone. And maybe you can also say thank you to Kevin in the chat.
Thanks so much, guys. And then please do the M1, the M0 blockchain course. I'm sure we'll be able to elaborate and give you a lot more knowledge on some of the things that are going on in the industry. So thank you very much, guys. All the best.
Thank you, everyone. Thank you.